If you guys waiting for the last pump, listen, nothing actually changed from our market review on the previous weekly digest. And that's exactly why this moment is very dangerous, because Bitcoin sitting in the fair value region, not expensive and not cheap, still not cheap. And wherever we get one last push up or we get sent straight into the winter market, you need to have a plan for this. So for today, I don't want to spend much time doing charts and explaining the technical figures. I want to focus on 2026 financial planning framework, which I'm personally using to avoid doing emotional decisions and dump actions on any market, not only on the crypto market. And guys, that's January 2026. You need to have this plan for yourself. You need to understand your targets, your goals, like how much you could expect from 2026, what you could do, what are the markets focused on, actually, what are going to be if the crypto winter come into play. So stay with me, and that's going to be the most important part. You need to focus not on the price target right now. You need to focus on what you're going to do with your money before the moves going to happen. So what's up, guys? This is DeFi Elite, and we are right now going to talk about the financial plan for 2026. Let's firstly get back to the market, but before we start, please subscribe to my channel. It helped me to grow, and I will do more content like this with a deep explanation and showcases from different markets. So let's go to the most important chart right now. What I do think, as I said, we are in the fair value region here. We are not in the expensive region or the cheap region. We slowly climbing to 100K, actually the level where the 50-week moving average was broken this cycle. And what I think could be, there could be very big trap. Why? Because as we can see from our last cycle, we had the same pattern and the same scenario. 50-week moving average was broken here, and then we climb up till this almost the same zone, and the bear market was started. So right now, the most realistic could be the last push, and this scenario is very simple. Bitcoin slowly climbs back towards to the moving average break zone, and this zone is around 105K. And now, guys, listen, I don't want to say that after that going to be the bear market. I'm saying that we are in the zone and we are coming to the level where actually the market loves to do most brutal things. It gives you hope, but then your hope became an exit liquidity for the market makers. So after this retest, we can get sharp dump, the type of move that actually could start a bear market, and where can we land if it happens? We could land at 200-week moving average, as it was during the last cycle. So this line is here, is a red line, and it's around 55 to 60K. Yeah, of course, you may say, this number sounds insane, but guys, just don't ask, is 60K is possible? Ask if 60K will happen. Will it delete me? Like, I'm gonna be instantly whipped out? Or will it be the best buying opportunity of my life? So that's actually the difference between the trader and the gambler and the investor and the planner. So on my chart, we have 3 blue lines. The first one is a 50-week moving average broken zone. Middle line is at the deepest deep region we already visited, and bottom is 200-week moving average. And right now we are in the fair value region. Let's go to the cycle timing. That's another one point here. That's the cycle timing chart, and what we could see here that we're already in the end of the cycle. If we will zoom in, the cycle basically approaching the end window. It could happen not tomorrow, not this week, but we actually late enough that the risk reward changes. So this is actually the phase where people get the most confident, as it was couple last time. So, and the market stops rewarding confidence. If you are heavily in a volatile assets right now, you need to understand this. You are not in the easy money phase anymore. And this is the most important part because the market already in the late zone. Think differently. Early market rewards aggression. Late market rewards survival. So you basically need to survive till the end and to the next reset. This is the main point for me. So let's go to the sentiment check. And right now on the fear and greed index, we have actually greed index 61 point. As we can see, even after the breakout of the 50-week moving average last time, we have the part of the market in extremely fear, then in fear, and then we had some extremely greed. But the sentiment went down. Right now could be actually the same situation. Just guys, pay attention to this. We are in a very dangerous zone. Let's go to the macro sentiment. So according to percentage of supply in cryptocurrency held by the public companies, we can see that nothing changed dramatically. We're still sitting on the same level. Then the market actually is waiting for one decision. Next week, the Supreme Court will decide what's going to be with the Trump tariffs. Will it be accepted or declined? So if it's going to be accepted, it's more a recession sign. If it's going to be declined, there could be some government payments to the companies who lost the money during this tariff drama. So it's going to be risk on mode on the market and could have some potential to growth. But in terms of volume, actually nothing with compared to Portugal president election on the poly market. As you can see, there's $108 million here. So this is the point. Then crypto ETFs, we have some inflows, but not the inflow party that the people expected. Then gold actually breaking all of the lines. Then silver again. I think silver bullying Ethereum right now because silver grew up way more higher than ETH from the past year. And that's just the part for the January of 2026. Then, guys, S&P 500, the toppest top from the whole history of the S&P 500. I think it could be even the AI bubble because we are so high right now. And this is showing us the number of the companies right now behind the US. They are just growing so significant. Then let's check the total market cap historically from the worldwide companies is right now $139 trillion. From December, actually, plus $3 trillion. It's the valuation of the Bitcoin just added on top of the global market cap of the companies. So what are the message here? Capital is still flowing, but not into your favorite crypto. And this is exactly why you need to have a plan for 2026 that's bigger than just a message or your hope that crypto will pump again and you're going to have a very good result from just investing in only one crypto. Before we will go to 2026 financial plan, I would love to do a short off top that I run a separate platform. It's called DeFi Capital. The link down below under this video, deficapital.tech. And here you can find all of my portfolio reports, all of my stocks reports, and everything here is transparent. It's actually all of the results, they have the basement, not just the Twitter opinions. You could find each transaction here that I made on the blockchain. So all of these numbers, they're totally based on the real actions. I would love to show you that actually from the last year, I outperformed BTC. And I do have in the result 221K. And I started from 100K, so I doubled my portfolio, except actually buying cars, paying for my rent, because this is the money on what I live. And from those experiment, because this is a public portfolio, I actually lost 91K during the year, and all of my wins and losses you could find on my platform here. I explaining it every time with the portfolio reports. It look like this. So with all of the explanations, all of the links, all of the meanings and the risks, and all of the addresses. I'm saying this because I want you to learn the process behind the real outcome, including the losses, risks, decisions, and the portfolio structures. So, all right, now let's actually talk about the 2026 planning template. So how to do your financial planning properly and your investment planning properly. First of all, I think you guys need to start with choosing your battlefield. So this is my first advice. Don't limit yourself to crypto. Crypto is cyclical. We live in the cycles. And let's say during the crypto winter, you can ignore very good opportunities in other markets like stock market, for example, or commodities. What happened with gold, with cobalt, with lithium, then even the real estate, fractional shares of real estate, or you could find the place on the planet with very good risk return in real estate. So basically, this is the main point. If you're limiting yourself only to crypto, you are sitting in the bubble with less opportunities. As an investor or as a trader, you need to have a different type of markets to accept as much as possible opportunities and then to execute them. This is the point. If you're limiting yourself only to one thing, you are stuck there. And just look at the last year. Last year, we had a very good growth on gold, and then in lithium, in silver, and people who are basically limiting themselves in crypto, they're sitting in losses. And this is actually the truth, very hard truth. I don't want to say that crypto is bad. Crypto is not bad. The point is that you just need to have an options. That's the main idea. So then you need to choose a narrative, not coins. Stop choosing coins. Think in narratives. Inside every market, we do have a directions, a popular directions. So let's take an example of the stock market. There could be AI, of course, chips, electric vehicles, could be even spaceships. Why I'm talking about the spaceships? Because Elon Musk trying to do the IPO on a SpaceX, and you could be prepared until the IPO. You could play with the different space stocks, and you could earn some money on that. So that's basically one of the greatest idea what I want to perform on the stock market. So even in crypto, if you have only your, let's say, personal coins, you are losing because we have a different narratives like privacy, predictions. Always we have a narrative of the Bitcoin and Ethereum like a base assets, then the stablecoin protocols. So that's an idea. Narrative shift first, price following after. Even though I advise you to learn more about the commodities because, for example, lithium had very big demand in the batteries industry. So basically, we are using devices every time and we need to have batteries. And that's where the lithium come into play because we have a lithium batteries. And the price on lithium is rising too. That's another one idea for you to discover the commodities. So two simple things you need to take. First of all, it's attention and volume. If you see that attention and volume moving, the narrative is moving. And basically, most people noticing that after it's already 200 or 300% blow up in some Zcash or Cardano or AI stocks, Nvidia or gold, etc. So gold is pumping, silver is not. You could jump into silver. That's an idea. Do not limit yourself only in crypto. Then, very important thing, guys, expectations and results. I want to talk about this. Why? Let me firstly explain you. Because if you have a dream to become a millionaire and you have only 100K or 10K, you do need to understand that you need to grow during the year 10 times or 100 times. And with this understanding, you need to choose a right tool, right instrument on the market. And then you need to understand that you have a different risk with different expectations. So if you have 100K, you want to become a millionaire, means you need 10x growth during this year, means that the only possible tool which could give you that type of growth is the perpetual futures. What else you could get with the perpetual futures? Liquidation. That's the point. So explaining you the tools, that's actually very simple formula. First of all, your result equals to tool, merge, risk, and the market. And the quality of tools are really matter, but people only look at the market. They ignoring tools and risks. And tools actually decide how you could lose. So very good example here, perpetual futures. You could grow up to 200%, for example, but you could have a full deposit liquidation. Or options, you limiting your losses to just paying the premium payment. You could have still a growth like up to 40, 50%, and this is good. Then if you're using just spot buying and selling, you have a moderate risk because you still have at least the tokens. They could worth nothing, but you have the tokens. Or you could sit in stables, which is lower risk, but lower upside. Even nothing in upside. You could just use DeFi to have some revenue on the stable coins, but you stay alive. And that's the main point. Yes, sometimes actually staying in stable coins, that's the highest ROI moves that you could do. Then let's talk about the quality of the tools. So actually, people ignoring this. People are really ignoring this. And not all tools or all instruments have equal quality. For example, perpetual futures. Very good case. If you're using perpetual futures for the goal to open long on ETH or BTC, you're doing accumulation in your position, you opening this long on at SEX, whatever it could be. It could be Binance, for example. Then, as it was a couple months ago, because of the Binance mistake with Ether price, we had very huge liquidation. So basically, a lot of people lost their full deposits with very small leverage. But if instead of SEX, you're gonna use lending protocol on chain and you're gonna trade pure Ethereum or you're gonna trade Rabbit BTC, then you are committed and dependent on the decentralized market, which is more stable than simple centralized CEXes, whatever it could be, OKX, Binance, Bybit, doesn't matter. That's the main point. So that's why I'm using lending protocols for longing ETH and BTC. And actually, I explaining this in my platform, DeFi Capital, in the useful template. Here you could find ETH BTC long template, which helped me to earn almost 150K during the last year. So that's another one point about the quality. Then simply holding BTC. Do not hold your BTC on CEXes, because if you're keeping everything on just centralized exchange, you are accepting the one hack away from zero risk. And that's the point. So isn't just what you buy, it's where and how you hold it and how you operate with all of those tools. This is very, very important thing. Map for yourself your best tools to achieve the result that you want to achieve with your investments right now. That's give you very good understanding on what your portfolio is capable. Then guys, next step, understanding the market phase, actually evaluating the market phase, because this is everything. For example, in this cycle, Bitcoin already played most of the big cards. That's halving, BTC ETF, USA Pro Crypto with the president launching meme coin. We also had some negative shocks like tariff drama. And what's the last card people talk about? BTC reserves. In the pension funds or in a government, that's the BTC reserves. And maybe it happens, maybe it doesn't. But even if it happens, it takes time for that narrative to become a real price action. So yes, we can still see the upside, and I don't want to have a bear market, but we can also see a nasty downside first. That's why in late cycle phases, the professionals, they are moving a bit differently. They are have more stable coins than volatile assets. And actually, this is the most interesting part of the portfolio management. The portfolio management is about to change the proportion between the volatile assets and the stable coins in your portfolio. And basically, we are moving in cycles. Every 10 years, we have a new very big narrative. AI, crypto, before that, many big narratives was. So what's going to be upcoming narrative? Could be the robots, or it could be spaceships and space travels from the SpaceX and Elon Musk. That's the idea. Then crypto, every time repeat the cycle for last 4 times. So basically, very cyclic market. And what are pros doing? They are just changing their proportion between, as I said, stable coins and volatile assets. That's actually the main idea. Then, guys, I want to talk about the part which you don't like. I want to say something very unpopular. That's actually the personal financial accounting and personal financial planning. So if your plan is just live from the trading and you are not already rich, that's usually a delusion. You need to have an income, you need to have a job, or you need to have a business because, guys, base formula here, income minus expenses equal your savings and investments. And this is the crucial point. If you don't have a positive cash flow, your portfolio basically becomes your salary. And only one bad month, even one bad move could ruin your whole year. And of course, because of this, you need to have your personal accounting system. Not fancy, just real. So keep it simple, action log. It could be very simple as a notepad. Your plans, your actions, your result. So what does it mean for me? If I'm planning to open, let's say, a short, if we will climb up to 105K, which I actually planning at using options, I logging this in my notepad, and after the result, I explaining what are the results and why actually I get what I get. That helped me to build my own system of decision making, and that's how I learn on my mistakes. This is a very important thing. Getting back to personal finance, you need to have a personal dashboard. And I would love to show you an example. That's actually the spreadsheet which I used a couple years ago. That's my spreadsheet. It started stupid simple. I just calculating here how much is my monthly income and how much my monthly expenses. I add my current capital. So you basically could do the same. This is an idea to add your current capital, to put all of your income tops and to put all of your expenses here. And then you could plan with real numbers, not just vibes, how much you could have till the end of the year. That's your reasonable financial situation. There are also some charts here showing this progression, charts showing the correlation between savings, income, and spends. And this is very important part. After the end of each month, I advise you to actually set the fact how much you earned, how much you spent, and how much you saved. And again, you need to have, let's say, the notepad with your actions. So date, month, decision, and result, what you get. Then what I have also here is the categories. So for example, I have different categories. That's just the chains here. Don't look here. Look to this part. I have stable coins, long-term, good farming, and experiment. And I do have my earnings if I'm using DeFi yield every day, every month, and I have the category percentage. Again, this is not what I do have right now. Right now, I have 100% on the stable coins, but this example is showing to you what's going to be if crypto going down, how much you're going to lose, or what's going to be if crypto going up, how much you're going to earn. This is very crucial and important point for you, because with this, you can understand, are your plans and goals for this year are real or they are fake? Or you need to use very risky tools to make them real, which just basically could 10x faster whip you out. This is the important part of the understanding actually how much you able to earn. Going back, if we will scroll up, you could find here the part of the spreadsheet where I accounting all of my positions in DeFi protocols. So this is basically the idea of calculating how much money do you have and then putting them into different categories, putting them into different ecosystem, actually what they yield yearly, daily, how much you earn exactly daily or monthly, and then your actions here, because some of the tools require you to do the claiming and selling the reward, for example, every week. And here you could put your actions and basically manage them by just flagging it. So this is the idea of the very simple system, which could help you to do your personal accounting. And where you could find this template, if you will open DeFi Capital and if you'll go to Useful Templates tab in left menu, you could find this template right after the ETH/BTC long template. I will publish it very, very soon. I'm just finishing all of the explanations and how the things works there. So it's going to be like just copy and paste useful thing. So in a couple days, you will find it here. And you guys are happy to let me know in the comments that you are interested to get this template, because actually comments help me to grow on YouTube and then produce for you more content like this. This is almost the end. That's actually the concept. Market right now still sit in the fair value region, the 200-week moving average around 60K, and it's gonna be called the winter market. But the real alpha is not predicting this one candle. The real alpha is building your 2026 plan, where any market outcome could benefit you. If you want the portfolio reports and the templates, check my platform. Thank you very much for watching and see you in the next one video.